And it's great to have you join us for another episode of Capital Market Live on Channels Television. Hope you enjoyed the weekend. Hope you made profit and bank this week. Let's take a look at some top stories in the world of business now. We'll see Nigeria's central bank has resumed the provision of offer quotes for Naira-settled OTC FX futures contracts with tenors ranging from 13 to 60 months. The move is aimed at facilitating long-term foreign exchange risk hedging for market participants. These contracts allow market participants to hedge against foreign exchange risk associated with fluctuations in the value of the Nigerian naira against other currencies. However, offer quotes for contract tenors between 13 and 24 months will be discontinued, with the CBN focusing solely on the 25 to 60 months of contracts during the period. And the Debt Management Office announced it has listed about 2 federal government of Nigeria savings bonds for subscription for this month at 1,000 naira per unit. According to statements by the DMO, the first offer is a 2-year FGN savings bond, which will be due on July 12, 2025, offered at interest rate of 9.07% per annum, while the second offer is a 3-year FGN savings bond due on July 12, 2026, and offered at 10.07 interest rates per annum. The opening date for both offers is July 3rd, closing date is July 7th, while settlement date is on July 13th. This initiative by the Debt Office aims to provide investors with an opportunity to earn competitive interest rates while supporting the country's economic development. And from there, we'll take a look at the domestic stock market, which has maintained impressive performance, which started at the beginning of June and into the first week of July. Markets benchmark indicators surged by 3.4% to close the week above the 63,000 points, and that's another new high, which the market has not witnessed since 2008. This is due to strong interest by investors for some high-value equities listed on the NGX. At the same time, sectoral performance printed positive sentiments across the board, particularly from the banking counter of the NGX, as it gained nearly 10% week to date. Elsewhere on the performance chart, the volume and value of shares traded this week was significantly higher than the figures recorded last week, as this reflects the returns investors are getting from the local bourse is attractive. Meanwhile, Japan Gold tops a list of 78 gainers for the week with a 58.57% advance. Coronation Insurance led 24 other losers with a 26.51% price decline, while the trio of FBN Holdings, FCMB, and UBA were major contributors to the overall volume of shares traded this week. And the first half of 2023 has been quite interesting for the fixed income market space, as it was characterized by several issues such as the forex market liberalization, rising inflation, subsidy removal, unattractive yields, and many others. To give us a review of the period ended and an outlook of what to expect for the second half of the year, we have joining me now Bankole Odusonya, Chief Dealer at Polaris Bank, joining me via Zoom. Great to have you on the show. Good evening.
Good evening.
So tell me, how have policy changes impacted the markets, FX and interest rates so far?
Yeah, I'll start quickly by telling you the 2 quick wins that we have seen in the market. One being on the exchange rate liberalization, where there's been a convergence. We're not having 4 or 5 rates as we used to have. There's been a convergence to the range of about 770, 780 that has been achieved. However, there's been some level of illiquidity where there's more demand than supply. So as we speak, there's some anticipation of international oil companies who have export proceeds being allowed back into the I&E market, because that's the aim of the government, and that's the announcement by way of communique, that all buyers and willing sellers should converge at the I&E market. Once this happens, if the international oil companies come back and start selling their export proceeds, we expect to have a fine balance where even speculators would then start selling, because once the liquidity comes back, the prices are definitely going to be more stable and then moderate further. So on the interest rate side, there's been a removal of the asymmetric corridor around the overnight market placement, the interbank placement market. So what that did was to crash rates to as low as 1% and then drop treasury bills yield trading, discount trading to about 5%. So the drop in those yields simply means that surplus fund holders like banks and other participants in that sector would have to look for real sector investments like risk assets and loans creation. The government was always concerned about how high yield government securities were, and then that concentration simply took out funds away from the real sector. So low yields and having a very positive curve where bills and overnight placements were very low, and then for bonds we've seen a drag down of yields from 16 to about 14% from some long end, and the mid end we're beginning to see bonds at 10 and 11. So those moderations simply mean they become less attractive, and their fund holders start looking for real sector opportunities, especially on the loan, issuing loans out to the real sector. So that's another win, quick win for this administration going into the second half of the year.
And how's the market reacting to the FX liberalization and I&E markets, announced last month, by the president? Looking at, foreign investors at this time, is Nigeria a buy with this unification?
Nigeria is definitely a buy, especially with the return of the futures, the NDF futures market. It's like a hedging tool where you get some form of insurance against your long-term FX desires. So basically, they do not deliver dollars, but at least it gives you some kind of insurance that, okay, if you're buying away from market, you get a Naira compensation. So it's very good. Most of our foreign partners were calling us initially when the prices were put up for a few days, but now that it's back since Monday, it's positive vibes. And we're beginning to see more offers in the market. It's just that we're having more demand than supply, and then prices keep, ranging from 760 to 770, and then we'll be touching. There was a lot of deals being done at 782 levels. But the key thing to note is that since the liberalization happened, you notice that the alternative market, which people call parallel market, hasn't really moved. So that was the market, and it hasn't really moved. Deals are still being done at that level, and then the I&E market is becoming more active day by day. Even the central bank in itself has kept on, coming to be a participant there. We expect more from them, and then once the international oil companies get back to that market, we expect serious liquidity to kick in, and then some more price stability. We can't say of strengthening of the Naira for now, but we can guarantee you of stability once the international oil companies get back to that market.
Let's look at the inflation story right now, about over 22%, at this time. Is this going to discourage investors, at this time, looking at most of the yields about 10%? Don't you think they'll want to get as high as maybe 20%, to get attracted back to this market?
That's been the speculation, but if you look at the bonds market, there's still some very nice yields at between 13 to 15% range. There are promissory notes of 24 to 36 months, ranging from 12 to 14, 11 to 13%. So we do not consider that as terrible. Before the FBI's, left the country upon the JP Morgan index removal and then COVID 2020, these were the levels we were trading, and that's our argument, that we were never at 20 when they were around. So we believe these levels are still attractive if we have more laws, and policy guidance that are very favorable. The other issue is that inflation, the real inflation figure that considers or captures all the policy changes that have been made recently, will be released on July 15th, because the figure that was released in June didn't capture what happened very well in May. Pronouncements were made on May 29th. So what we're going to see on July 15th is going to set the pace. 9 days after the July 15th, you'll be having a monetary policy committee meeting on the 24th of July. So within that week, that's a key moment where the direction going into the second half of the year is going to be set between the monetary policy committee and then the cabinet that comes in for the new administration. So it's a nice space to watch. But basically, inflation is going to go up from where it's at 22.4. We expect it to push as high as even 25. Will the Monetary Policy Committee react by increasing rate? We can't say. This is the first meeting being held by the Monetary Policy Committee under this new administration. There could be retention of 18.5 monetary policy ratio, for instance, going into the next auction, maybe in September. So after July, you'd have September. So probably just to watch the impact of what the policies are and then to wait for the cabinet, the economic team and all that. So there's a possibility there will be retention at 18.5. And then they could also proactively do another 100 basis point to 19.5. No, those are just the possibilities. But inflation is definitely going to be an uptick, and definitely there will be a reaction from the committee. Yeah.
Yeah, even though the president did harp at the interest rates being too high, his inaugural speech, but we'll definitely be watching out for the first meeting, under this administration. Thank you so much, Mr. Bankole Ojusonya, Chief Dealer at Polaris Bank. It was great having your perspective today.
Thank you.
All right, so the West African Monetary Institute set to host a capacity building sensitization program on West African capital markets integration as a phase 2 project, ideally connecting capital markets in the West African region. For more now, Dr. Abdulrasheed Zubair, Project Manager, West Africa Capital Market Integration Project, joins me from our Abuja studio. Great to have you. Good evening.
Good evening.
So I know the West Africa capital market integration is in phase 2, at this time. Paint a picture of what phase 2, looks like.
Thank you very much. The phase 2 program is centered on the strengthening of capital market data dissemination and expanding of the capital markets integration in the West African sub-region. So the phase 1 has already been done, which is the sponsored access. And now in this phase 2, we centered towards the qualified West African broker, whereby a broker in the home country can trade securities of the countries and other countries' securities while in his own country. For example, a Nigerian broker can be in his own country and trade the securities of Ghanaian securities in Nigeria. The same thing also, somebody in Cape Verde can also trade securities of Abidjan capital market. So that is the idea of the phase 2. So usually in this phase 2, we have 3 different components. We have the harmonization of the capital market rules, because as you know, we have 4 different stock exchanges that comprises of the Nigerian Stock Exchange, the Ghana Stock Exchange, the Cape Verde, and also the Abidjan, which is BRBM. So these 4 stock exchanges, they have different rules. So in November, December 2021, we had a harmonization exercise whereby all the rules were harmonized, because that's the first thing we're supposed to do, to have a seamless rules whereby the operationalization of these securities dealing can be so easy and can be so straightforward. So that is where we are. But now what we want to do, part of the second aspect, is the capacity building. Capacity building is one of the segments of this phase 2, whereby the brokers, the dealers, and all the stakeholders will be bring into the picture of these new capital market rules. They will have to be abreast with these new rules for them to be able to trade. And then the qualified West African broker need to have a license for him to trade while from his own country to trade the securities of other countries. The other segment of this phase 2 is the issue of data and database and website. We're going to create a kind of a database and website for these 4 West African capital markets. The plan is on foot. We already secured the consultant, and the consultant has already commenced working on that. We're almost done with that. Hopefully in the next couple of months, we'll have a brand new website for WACMI, West African Capital Market Integration. So also, aside from that, the last phase of this phase 2 is the issue of the need assessment, because some countries in this West African zone are still yet to have active stock exchanges, like, for example, the Guinea, the Liberia, the Australian, and the Gambia. So we are doing a roadmap study to have a kind of a framework for establishing of the capital market in this particular region, in these countries without a stock exchange. So by the time we have this on board, that means we have integrated capital market in the WAM zone and also in the ECOWAS.
I would definitely be looking forward to that, because it is interesting, being able to buy stocks, from other countries. But we'll take a break now. I still have with me Dr. Abdulrasheed Zubair, Project Manager, West Africa Capital Market Integration Project, and we're talking about trading with other African countries, talking about stocks. We'll continue the conversation right after this break. This is Capital Market live on Channels Television. Welcome back to watching Capital Market live on Channels Television. We're talking about connecting capital markets in West Africa right now. I have with me Dr. Abdulrasheed Zubair, Project Manager, West Africa Capital Market Integration Project. Thank you for staying on.
Thank you.
So tell me, what role will the Central Securities Clearing System, play, once Nigerians are able to buy stocks in other West African countries? How would ownership of a foreign stock, be captured? Let's say I buy, a stock in, say, the Ghana exchange. How would my ownership, be captured?
Yes, thank you very much. All those rules have been stated. The ownership will be like, it will be like a foreign ownership, but it will be recorded as a kind of an inflow into that particular market. So it will be recorded in the book of the Nigerian Stock Exchange, but it will be owned by somebody who is an expatriate. So it's like a kind of an inflow into that particular market, but not domestic inflow, but rather outside inflow. So it will be like a double book balancing, inflow and outflow. From the other side, they record it as outflow, and in this market, we record it like an inflow.
All right, so definitely, it's how would this, integration impact, foreign participation in most of this West African capital market once it kicks off?
Yes, thank you very much. I think that is one of the major idea of this capital market integration, because the issue is that we want the visibility of this market outside the region. And as you know, nowadays, most of these developed countries investors, they are looking for a market where they will invest, especially for the African market, where there's a population. At the same time, also the return is a good. So because of that, this integration will make the market to become so visible. Like I told you, we are trying to strengthen the capital market data dissemination through having a kind of a website where all these firms, all these markets will come together, and the website will be visible to the globe, to the whole world. So the investors can be able at a fingertip to have a look at what is happening in this market. The same thing also, the investors will be attracted, because sometimes one of the issues that try to prevent investors from coming to a particular country is because of the risks. Political and economic instability, we know that is one of the major issues. So, but having an integrated market, it will make them to like a kind of disaggregate their risks. The risk exposure will not be there, because they can be able to move from this country to another country in case of any perception of a risk. So one aspect of this project is to have more participation of also foreign investors, because as more foreign investors participate, we'll have more capital. The market will be more liquid, and also the countries will have more capital to invest, and the economic expansion will come. Perhaps it will also indirectly impact on the foreign reserve of the countries, because when they come from outside the region, it will impact in terms of the foreign reserve increment, and that will allow the central bank or any monetary authority to leverage on that to stabilize the exchange rate, which is one of the focal problems we are having now.
And what's the plan, to educate investors, in these parts now? Because you're going into another, market in another country. You don't really know about the stocks there. What's the plan to, make sure investors are able to make informed decisions, before investing in a stock in another country?
Yes, that's a good one. That's true. Of course, because we have to be careful with the kind of the investment that you guide investors to invest in. Definitely, we have this website, And then this sensitization is not only going to be here in Lagos on 11 and 12, but rather it's going to cut across all the jurisdictions. There will be another one coming in Accra on 11th to 18th of July in Accra, whereby the investors and the stockbrokers and all the stakeholders will be there in Accra to be sensitized on this harmonization of the capital market rules. There will also be another one that is coming up on 25th and 26th of July in Cape Verde. That one also, all the Cape Verdeans will be there, the stakeholders, and they will be sensitized. And the last one coming up in the Abidjan on 8th to 9th of August, same year, 2023. So in general, most of these investors, stakeholders, and all alike will be abreast with the new market rules. And also aside that, we have a common website. That's one of the importance of this common website, whereby all the performance indicators and all the capital market capitalization, all share index, the returns, and all the kind of indices will be uploaded into the site of the WACME, where all the four markets will have their inputs there. So for an investor in Nigeria, for him to make an informed decision of investing in Abidjan, or an investor in Cape Verde, for him to make a kind of informed decision of investing in Accra, he will have to look at that kind of website, and that will inform him very well.
And, you know, looking at our capital market right here in Nigeria, do you think investors from, you know, other African countries would be interested, you know, in buying stocks right here in Nigeria's capital market?
Yeah, sure. We can see that because, like I said, because look at the issue of the return, they will look at the stability, they will look at the issue of the return, and that is some of the major issues that will inform their decision of trying to invest here. So there are so many investors perhaps that may definitely invest in Nigeria. Likewise, also Nigeria will also invest, Nigerians will invest in the other countries. So there is that opportunity of having more investors coming into Nigerian market, and the market will be more liquid. I bet you there will be not only necessarily from within the West African zone, but also from outside the country, that is from outside the zone, because that is even the major one that we are even targeting. We are targeting as most of these foreign investors to come in. So definitely it will make the market more liquid, and also it will also enhance the capital access in the country.
And in your view, what impact would the integration have on, you know, economies in West Africa? And is there any plan to integrate, you know, other parts of Africa?
Yes, thank you. Yes, definitely this integration, if it's done properly, and I mean, if it's as we are implementing, West Africa Monetary Institute, WAMI, is the implementing agency of this project, while the African Development Bank is a financier, or they administered it. The fund came from the West Capital Market Development Fund, from Leathenback and Swiss. So these two countries, it's come from the Netherlands and Luxembourg, sorry. So these are the two countries that form this Capital Market Development Fund. So as I said, definitely with time, after we integrate this particular region, there will be more integration in the other regions, like the Asia, they are doing their own in the Central Cameroon. That is in the Cameroon, they have another one for the Central Africa. The Eastern Africa, there's also another African project they call Africa Linkage Project, which is trying to link the whole African continent. But the benefit that will accrue from this project is that if the project successfully is conducted, and if the market is attracted with this project, all the countries will benefit, because there will be more inflow of foreign exchange. Like I said before, if there is more inflow of foreign exchange from the investors because of the market is here in Africa, at the same time also, most of these countries in Africa nowadays, they are relaxing their policies for the capital inflow, where the market is more friendly for the investors. So definitely it will increase the foreign exchange accretion, and that will enhance the reserve of these countries, having more reserve will result in kind of stability of the foreign exchange, because you will need to have a lot of supply of the forex for you to be able to have stability of the foreign exchange. And looking at most of these countries that are in this region, usually there is a kind of a depreciation that is happening now. Look at what is happening to Naira, look at what is happening to CD and most of these countries' currencies. So definitely by the time we have more investors into this kind of investment into the capital market, it will not only definitely stay in the capital market, but spillover effect. There will be spillover effect in different segments of the economy. At the same time also, like we know that we need a lot of capital projects, that we need funding. So this will allow more funding into the economy that will go not necessarily into the portfolio investment, but it will go into the real sector. So at the end, it's a kind of a win-win for the economies of this West African Capital Zone, as long as this project is concerned.
All right, definitely we'll be definitely looking out for that, and that'll be really interesting, being able to buy stocks, from other, West African countries around. Everyone's definitely looking forward to that. I hope we can actually do that on our mobile phones, at some point, once it kicks off. Thank you so much, Dr. Abdul Rashid Zubair, Project Manager, West Africa Capital Market Integration Project. It was great having you today.
Thank you very much.
All right, so yeah, you can watch this again on our YouTube channel. Just run over to YouTube. You can search for Channels Television, click on videos. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Enjoy the weekend.